lowest interest rates in 1,275 days. This is great news. I've been waiting for this for a while, and interest rates have been flirting with that 6% line for a while, and we finally broke it. Didn't break it by much. We're seeing interest rates right around 5.99. This is, of course, according to Mortgage News Daily. But hey, we have finally broken that 6% barrier. In 3.5 years, we haven't seen it, so now we have seen it. And one of the biggest differences between this time and other times is we're actually seeing it in locked loan data as well. So Optimal Blue released a report recently, and it shows where locked loan data has been over the course of the past week. You're seeing VA around 5.6, FHA around 5.8, and Fannie and Freddie around 5.9. And of course, this Optimal Blue data, this is an aggregate of all loans. So again, 5.6 doesn't necessarily mean the interest rate you're going to get. Again, there's a lot of credit score, there's LTV, there's a lot of factors that vary into this. But you can see you are starting to see true locked loan data finally be in the fives. So a huge win for the mortgage and real estate industry in general. And what's really optimistic is we're seeing a lot of promising signs that the momentum could continue to build, right? That's where we just didn't really see that in the past. Hey, interest rates were this, and the market just wasn't fully there yet, right? Remember, think about it, in 2023 or 2022, inventory was at all-time lows. Yes, 2023, we improved, 2024 better, 2025 better, 2026, right? In 2025, yes, inventory is still 20-25% off normal levels. Remember, this is pre-COVID levels. We're 25% off that. Well, now we're only about 12 to 13%. So we are still not back to pre-pandemic levels for inventory. Listings, not back to that. But again, we've increased year over year, 22 to 23, 23 to 24. Every single data point that we are seeing has increased year over year. We were working off of the lowest bars in history, so it really only one way to go. But that gap, that barrier between pre-pandemic levels and now you're looking at most of the data points only 10 to 12% off, and interest rates finally breaking that 6% level. So hopefully, as we continue this trend, maybe, just maybe, we're going to see a very positive summer. If you look at transactions last year, and from the loan perspective, you actually see a volume pick up. But a lot of it, or some of it was refinances. You really haven't seen that true purchase spike. And the reason why we haven't seen that purchase spike is, again, sellers. You just haven't seen as many listings over the course of the past 4 or 5 years. Well, listings from 2 weeks ago went up 23%, and then this last week went up 12%. So we are above 2025 levels, we're above 2024, we're above 2023. But the real point we're looking in March. March is truly that spring, or the start of that spring buying season. So 2 weeks in a row, we're hoping is the start of the trend, the start of this pattern. And if we see that in March, then we know a lot more optimism going into the summer. And then, of course, again, looking at interest rate perspective, you're seeing a lot of things start to align. Trueflation, sub 1% for almost the entire month of February. Fed, dual mandate, you got employment, you have inflation. Well, employment's strong, so then you have inflation. Inflation's at sub 1%. Again, that takes about 120 days to really pull into CPI reported inflation. So again, May, June, July, you're seeing a lot of this start to align that maybe, again, maybe, just maybe, we might have that good, strong summer that we just haven't seen over the course of the past 3 or 4 years. Let us know your thoughts. If you guys have any questions, please reach out.